Hey everybody, it is Tuesday morning. It's around 4:20 in the morning for you guys on the East Coast, and I want to do this really quick. I try not to take up too much of your time, but I want to focus here on what has happened over the last 4 days. And I'm starting here on what I'm looking at here with my spreadsheet with COVID. The COVID high being February 19th, and what I'm counting, and I don't know whether or not my scrolling is too fast for the video to capture it, but I'll go by it and explain it to you that I record the gap ups and the gap downs every session. So wherever the previous day's close is and wherever the next day's open is, whatever the difference is between the two, I record that to see whether or not we had a gap up or a gap down, and then the rest of the information that I've shared with a lot of you before. Going back to COVID, we've never, even when we had the circuit breaker, we've never, ever had 6 consecutive sessions where we have gap down. We've never had it. Okay, we've never ever had it. We've had threes, we've had fours. There's been an occasional five. I have to remember where. And again, I'm going back all the way to 2020, and I'm not seeing anything anywhere. Obviously, we're in a bull market back then, where we're getting anything even remotely close to it. Here's four in February of last year. Going back, going down. Here's another four back in April of last year, and it's just not something that's there. Here's four in August of last year. Here's four in September of last year. And again, going through, you're seeing threes, seeing twos, and now we come into 2022. And I'm here January, where the all-time high was on January 4th, second day of the second session of the year, and we don't have it. We come down and we have five. We have five here in April. One, two, three, four, five. And then we have a gap up, which still closed red, but again, we had a gap up. Come over here and we're going back again because we've had all of that down back here in June. Again, one, two, three, four, five. Five gap downs in a row, 100-point days, and then again had a gap up, still closed red, coming towards the end of every wave. What we've got here now is six. One, two, three, four, five, six. Six in a row. The ranges intraday have been absolutely nothing. 40 points, 40 points, 50 points, not even 50 points 5 days in a row. And then yesterday was 65 points, and we came right down to that 41.37. What we've got, like I said, what we know it took 22 days to go up, took 39 days to go up. On our drops, we've had that 5.25% in 2 days. We had 5.03% in 4 days. We've now just posted 4.52% over the past 4 days, and we've come down to that major pivot. And what has happened when we've done this is, again, coming in here and strictly focusing here on our RSIs. Here's the SPX on the daily. The RSI already down here teasing oversold, right? Come over here on the NDX, RSI 5 daily, teasing oversold below 30. Over here, same thing, Dow Industrials, right at 30. Come back again, right here, IWM, right at 30. And these are right where you were back here when we were putting in these July lows. The exact same thing as the July low right here. So, again, I posted out a week ago that this would be the path that we would be looking at, where we would have a bullish path down and we would have a less bullish path down. And coming as how we are in what I see as the less bullish path, where we've come all the way down basically to around 41.15. Not all that way, but we've come down, we've filled the CPI gap within 5 points. Now we're looking for a bounce somewhere up to around that 42.20, 42.27 area. And then from there, we'll get a judgment as to whether or not we actually do have a little bit more downside to come. But I would strongly stress that this is definitely not a go blind by the dip like you had there in June and July. This right now is in the middle of a could be either or, but because we are oversold on these time frames, we're definitely going to be looking for some form of a bounce to be coming here. And again, looking strictly only at the RSIs is what I'm focusing on. I'm looking at the SPX only. This is a 12-hour oversold. Come over here onto the 6-hour, oversold. Come over here onto the 4-hour, which, if you remember, the 4-hour was the big bread and butter when you had every single rally that took place was always coming off of an oversold 4-hour. And here we are in the 4-hour, down at 5.67, almost as low as we had here on the June lows just prior to posting the June lows price. So, again, come back 2 hour. Where's my 2 hour? Where's my 2 hour? I don't have my 2 hour here, but anyway, the 1 hour got a tiny little buy divergence over here on the 1 hour. Oversold 15 minutes, 30 minutes. Everybody's oversold. So, again, what we should be expecting, what we should be looking for here is to start seeing a recovery as we start heading into this Friday, as we start heading into Jerome Powell. I would look for no higher than the gap to be filled from the weekend, which is right around that 42.27 area. And then from that, we can start to assess where we are, because again, the 50 retracement from these lows to that high comes right there to that 42.27.57, and 42.27.75 is your 50 retracement of the entire 2002 drop. The two align too significantly to avoid it from being a coincidence. That's what we're looking at for our bounce, 42.27.57. Does it happen today? Does it happen tomorrow? Does it happen on Friday? That I can't tell you, but that is the level that we are going to be looking for this to be bounced up to, around there, and then we'll figure out where we're at once we get up there. Talk to you guys in the chat room. Have a great day.